Hi, everyone. We'll just let everyone get into the Zoom room here. Well, good afternoon. On behalf of the Law Society of Nunavut, I'd like to welcome everyone to this session on business law that has been generously presented by Gowling WLG, who are visiting, lawyers from Gowling WLG are visiting Iqaluit today. And so welcome and thank you. This presentation is one of our continuing legal education sessions, and you can look at the other ones that are available online free of charge, and the recording will be made available as well subsequently. So without further ado, thank you very much to the folks from Gowling WLG who are here. I'll let you introduce yourselves, and it's delightful for me as an alumni of Gowling to have you folks here.
Nice. Great. I did not know you're an alumni of Gowling. That's good to know. So welcome everybody. And we have one person in the room, Michael Chandler, criminal law here in Nunavut. So my name is Cam Cameron. I am actually the lead on the Indian Day School class action, and which is more of a management role. And I am also a partner at Gowling's in our corporate commercial and our Indigenous law group. And I'm also a member of the Law Society of Nunavut. Introduce everybody, but perhaps it's best if you spoke for yourself. Maybe I'll pass it over to my colleague to my left, Pierre.
All right. Hi, everyone. My name is Pierre Allery. I'm a partner at Gowling WLG. My practice focuses on tax disputes against the Canada Review Agency, as well as international tax and transfer pricing.
Yeah, my name is Connor McGarry. I'm in the corporate group with a focus on general corporate matters and mergers and acquisitions, and recently being able to get involved in some transactional work up in the territory. So pleasure to be here, and great to be up here in person.
Hi, everyone. My name is Brianna Donnelly. I'm an associate in the Ottawa office at Gowlings. I just started my journey as an accountant. As a lawyer. Prior to that, I was an accountant, and that's where I got my CBV designation. So that's a chartered business valuator. So I do work in the commercial litigation department, but I'm hoping to add value with my numbers background. That's me.
So we're all going to be presenting different parts of this presentation today. We're going to probably start off with Connor. He's going to start with some incorporation information. We actually have if we go to the next slide, we have a list of topics that we're going to make our way through. I won't read these to you. They're on screen, but this just kind of gives you a roadmap of where we're going to go and how we're going to wrap things up. So I think we can just move on to Connor.
Great. Okay, so yeah, we'll start the presentation just talking about generally incorporating your business. And so first thing to consider is, when is the right time to incorporate a business? And obviously that's always circumstantial, but things for clients to consider is their financial circumstances. So usually if they hit a certain threshold, the investment into incorporating might be worth it. Again, if they want to separate have a separate legal entity under which they're transacting under, that's obviously a large consideration. And then what their strategic goals are, if they're looking to take on new investors or some financing, it's often easier to accommodate that through a corporation as opposed to a sole proprietorship. And then also it's you've got to consider the nature of their business. So what is it that they're delivering? What services are they delivering? So some advantages of incorporating, a large one is the creation of a separate legal entity. So essentially a corporation, it becomes, a separate body under which they're transacting, and it separates the liability. So this kind of goes into the limited personal liability advantages, as well as that they are protected as a shareholder from the obligations of the corporation. Now they might, there is some limited liability that they might be exposed to as a director, but generally as a shareholder, they are protected, and creditors and customers can't come after them personally. It creates a clear structure, so a delineation between what they're doing personally and what they're doing through the corporation. So it just again, this often leads to better access to capital. So again, if you're operating a sole proprietorship, difficult to go out and raise money from outside investors. So you need that clear structure so the investors understand what they are buying into and what they're owning and how much they own. Also easier to go out and get financing as well. Again, it clear who the banks are lending to. Sometimes it does lead to enhanced credibility when you're bidding on contracts or entering into contracts that enter into with a corporation. It shows that you could show the third party that you're set up, that you've made the investment into that, and that they know again that you likely have a longer standing business and that this is kind of your full-time job. There's no life limit again, also on a corporation. So a corporation survives the death of a shareholder. And so this actually allows you to create value that is transferable in the future. So if you die as a sole proprietorship, or if you look to transition your business as a sole proprietorship, again, there's not a lot of value creation that can be transferred, but the goodwill of the corporation lives on past the shareholders' lives. From a tax consideration, there's a number of advantages. So the income that the corporation makes is taxed at a lower tax rate. There's also further advantages for small business deductions. So a Canadian controlled private corporation can claim a lower tax rate on its first $500,000 of taxable income. So, you're able to generate wealth through the corporation and not pay as high as taxes. There is some flexibility on how the income is distributed. I should, I guess, preface this as a lawyer to cover myself, is that we're not giving tax advice here. But it is, these are just kind of common themes and things you can look for when incorporating and work with the accountant to set up in the proper manner. Again, the income from the corporation generates versus through a sole proprietorship is that it can be split. So, you can have, spouses on as shareholders and they can get dividends, can pay out income as salary. So it depends again on your circumstances, but the income that's generated can be withdrawn in a more tax efficient manner. Again, when you go to sell, the tax advantage is a big one, is that if you're selling to a third party, and again, this is a Canadian controlled private corporation, each shareholder can claim their lifetime capital gains exemption. So they can make proceeds or have a gain from the sale of up to 1.25 million currently, and that's tax free. So that's a big advantage again, if you're looking to transfer the wealth or to create value in a corporation that you can extract one day. That's a big advantage in the capital gains exemption. And the last advantage that we're going to touch on is the name protection. So, corporations can be incorporated as a numbered company, or they can have a corporate name. The corporate name does add a layer of protection, but it should be noted that it is not the same as a trademark. So, depending on how valuable the brand is, where the business is operating, you might look to get additional protections through the trademark, but at least having the corporate name does add a layer of protection for that name. So there are, some other disadvantages or some things to consider, and perhaps for your client, incorporating might not be the best structure. So there's obviously a startup cost and annual maintenance cost to incorporating. So you have to, either hire a lawyer. There's lots of online platforms now that you can incorporate under, but there is basic filing fees, and then every year you have to again do your basic filings and prepare your resolution. So there is a cost, and then there'll be a separate tax return as well. Again, another cost there. These aren't huge costs, but they are something to consider at least. Again, there's more requirements and increased formality. So decisions need to be documented, whether they're through shareholder resolutions or director resolutions. So you do have to document decisions. And, if it's a single shareholder, single director, the formality is likely less than if there's third-party shareholders and directors. Obviously, at that point, it becomes quite a formal process with shareholder meetings and director meetings and shareholders agreements. So that is something to consider. the losses from a corporation. So if your corporation is not making money and it has a loss, that loss cannot be used to offset personal income from other sources, such as like outside employment, or if you have rental income, you cannot use the losses from the corporation because it is a separate legal entity against your own personal losses. Whereas if a sole proprietorship had a loss, those losses could be used to offset against income from other sources. And there's no personal tax credits. So, you know, if there's tuition credits that you're looking to use or education credits that you're looking to use personally, you can't offset those against the incomes corporation. I guess we'll feel free to jump in at any time if there's questions. I think we have time at the end as well, but happy to address any questions as we go as well. So we'll quickly just touch on what does it actually mean? Like, what are the actual steps to incorporating? So first step is for the client to determine if they like to use a numbered company or a name. You know, using a numbered company is simple. The number is automatically generated, and you don't have to worry about it being available. If you are looking to incorporate with a specific name, a name search has to be run to see if that name is available in your jurisdiction, that name search shows up similar names that are used across all jurisdictions in Canada and also other trademarks that might be registered. So you can see what other people are using that name or other companies.
Hey, Tucker. How bad are you doing? What's going on?
Yes.
Just to jump in, I don't know if I misheard you. You said does the search go Canada-wide? I thought it just stayed within the jurisdiction like the province for the name.
It'll pick up Canada-wide.
Oh, really? Eh? Oh,
Yeah, so you can see if you have a ABC corporation, you will show if that company exists in BC, Alberta. It'll pick up the different jurisdictions.
what are you precluded from using it if it's in another jurisdiction? Okay.
Will it lead to confusion in the marketplace? Is
Okay.
kind of the general test. So if it's clearly a business that's only operating in BC and doesn't operate in territories or doesn't operate in Ontario, then you can usually register it, but you know, there could be someone, that company could make a argument to have you remove it, but it's kind of that confusion in the marketplace is the test.
Oh, I always thought it just stuck within one jurisdiction, but thank you.
The next step is to prepare the articles of incorporation. So the articles are what are actually filed and are the constating kind of what creates the corporation. So to do that, you need to have your name, or whether it's a numbered company, determine the share classes and the number of shares that will be authorized to be issued. Typically, you name the initial directors on that as well. And then you can also name other provisions, any restrictions on share transfers can be set out in the articles of incorporation. And you can identify your preferred language of choice as well. And then the last step is you have to file an initial return with your registered office, with your list of board of directors and your officers. And so there are some, depending on the jurisdiction of incorporation, there are rules around residency for directors. So federal companies require at least 25% of the board to be residents in Canada. In Ontario, that was removed. So in Ontario, there is no requirement around residency of board members in Ontario corporations. And then just something to bear in mind is once you've incorporated, there are ongoing obligations. So there's an ongoing obligation to file an annual return, whether it's with Service Canada, or if it's in the territory, incorporated in the territory, or extra provincially registered. So you do have to file ongoing annual returns. You have to keep the public record up to date with the names of the directors and the officers, and if those ever change, you have to file updates for those. And you have to prepare the statute requires annual resolutions of the directors and of the shareholders. And so those need to be prepared and signed on an annual basis. And any other material transactions that are occurring need to be properly documented. And of course, you know, the annual maintenance work is no one's favorite job. Often business owners, you know, have better things to do and spend their time elsewhere growing the business, but it's very important to maintain your minute book properly throughout the duration of your corporation. And it can save hours and hours and hours of time in the future. You know, if there's shares that have been transferred that weren't properly documented, we've seen that lead to deals not going through where people can't trace the owners through the history of the corporation. And so it's very important to keep up with your minute book maintenance, and it will save you and your clients a lot of time in the future to stay on top of that. So I think with that, I'll pass it over to Pierre.
Thank you, Connor. So earlier, Connor talked about some of the tax advantages of incorporating. Now, I want to talk about some tax considerations when the Canada Revenue Agency decides to audit your corporation. So I always tell my clients that the CRA is a highly active or even aggressive tax administration compared to some other tax administrations around the world. And so it's very important to always cross your T's and dot your I's. So as a corporation, you're going to be audited under different CRA workflows than individuals. So the CRA has various divisions within it that will audit different areas, such as payroll audits, GST, HST audits, or general corporate audits. And as a corporation, you could be subject to multiple audits at the same time. So some of the common CRA audit focuses that we see for small and medium-sized businesses include the following. So as a corporation, you're going to report revenue every year, and then you'll claim expenses to reduce your taxable income. And so the CRA has an incentive to review your expenses and to disallow those that were not properly documented or not actually incurred to earn business income. So it's very important that you make sure to keep all your relevant documents, such as invoices, receipts, credit card statements, to show the CRA that these expenses were actually incurred for the purpose of earning business income. And in some cases, the CRA might actually take the position that not only should it disallow the expense for the corporation, but perhaps the expense was actually incurred for the personal benefit of a shareholder. So in that situation, they will disallow the expense, but also include that amount in the shareholder's personal income. So you're essentially being penalized twice for having not properly documented this transaction. And so one common example of this is with respect to corporate vehicles. So if a corporation owns or leases a vehicle, the CRA expects this corporation to keep a mileage log. So whenever you're going from point A to point B, you're expected to list in your vehicle log that this was 20 kilometers and the business purpose for this trip was X. And so if you don't have this, the CRA can disallow all your corporate expenses and also in certain cases include those in the personal income of a shareholder. So another very important concept is that of the normal reassessment period. So a lot of my clients ask me, how long does a CRA have to come back and assess me after they've done the initial assessment? So essentially, as a taxpayer, you'll file your tax return, you'll receive a notice of assessment shortly thereafter. And then from the date of that notice of assessment, if you're a Canadian-controlled private corporation, the CRA will have 3 years from that date. And for other Canadian corporations, it's 4 years. But there are circumstances where the CRA can actually assess you beyond this period. And the CRA will have the burden to show that the error that you made in your tax return was attributable to carelessness, neglect, or willful default. So again, generally in tax, it's the taxpayer that has the burden to show that what they filed on their tax return was actually correct. But when it comes to this, assessing beyond this normal reassessment period, the burden is on the CRA. And the same applies to gross negligence penalties. The CRA has the burden to show that in your tax return, you made an error that was either done knowingly or under circumstances attributable to gross negligence. And so if they're able to show that, the penalty is actually quite stiff. It is 50% of the additional tax resulting from that error. So the next thing I want to talk about is the concept of director liability, which corporations are often not aware of this until it's too late. So earlier, Connor was talking about how by having a corporation, you're dividing the liability between the individuals and the corporation. But when it comes to director liability, directors can sometimes be found liable for a debt of the corporation. And so two common examples are first, source deductions. So when there's payroll withholdings by the corporation from its employees for CPP, EI, or income tax, or if there's GST or HST being collected from their customers, if these amounts are not remitted to the CRA as they're supposed to be, the CRA can then go after the directors of the corporation. But now there are three basic rules to remember. So the CRA must demonstrate that it was unable to recover these amounts directly from the corporation. And also the CRA must issue the assessment against the director personally within 2 years from the time that this director ceased to be a director of the corporation. So it's very important that if ever you're going to be a director for a corporation and then you cease to be a director, you must really make sure to properly document the date on which you cease to be a director so that CRA can't later on go after you for amounts that are owing to the CRA after this 2-year period has expired. And finally, there's also a due diligence defense for directors. So the CRA has to show that the director in question did not exercise the degree of care, diligence, and skill required to prevent the failure to deduct, withhold, remit, or pay these amounts to the CRA. And so finally, a similar concept, but here it doesn't apply to directors. This is more so a liability for shareholders or majority shareholders of the corporation. So in certain cases, if a corporation owes money to the CRA, and then during this time, they make a transfer to a non-arm's length party, which could mean a shareholder that has more than 50% of the shares of the corporation, then the CRA can say that this arm's length party or the shareholder is jointly liable for the debt of the corporation. So let's say that the corporation owes $20,000 to the CRA. And while this amount is owing, the corporation also issues a dividend to a majority shareholder of $30,000. Well, under these circumstances, the CRA can then say that the shareholder is on the hook for the $20,000 that is owing by the corporation to the CRA. So it's really important that if you're a corporation or even a shareholder, you make sure that if there are amounts owing to the CRA, you don't want to be issued a dividend that later results in the CRA coming after you personally, or they can, they can collect against you, they can put a lien on your house, they can freeze your bank account. So not a good situation to be in.
How much power does a shareholder, let's say, have getting information out of the corporation to cover situations like that? Like, I mean, you go up to the, let's say, the directors or somebody's pulling a fast one or that. Maybe not, I don't know. But I'm just going on an idea. I'm a shareholder and I want information. I go to get it and they just say, I'm sorry, we don't have that. I'm not giving it to you.
Yeah, I mean, preferably if you're a 51% shareholder, then you should have that kind of, that's why it only applies to majority shareholders.
Oh, okay.
Right, if you're a 10% shareholder, this should not
Don't worry
apply to
about
you.
it. Okay.
But under corporate statute, the only information that the shareholders are entitled to is the annual financials,
Really?
audited annual financials. And the auditor report. That's all you're entitled to.
So is that going to show up in?
I don't know. Yeah, well, the tax liability should show up in the annual statements.
You would think so.
Only if we had an accountant in the room.
I'm just trying to
Yeah.
flesh out ideas where the shareholder just gets blindsided, something, and they just don't have the information or can't get it.
Then you hire a good lawyer to
Okay.
CRA after the corporation. Should be their fault.
I mean, as a 51, again, this only applies to 51% shareholders, so they're entitled to appoint the directors, right? Under statute, the majority of the shareholders appoint the directors, and the
Okay.
directors have a lot more access to
Good.
information.
Okay.
Yeah, and oftentimes majority shareholders are also directors of the corporation.
All right, that's where I step in. So when you decide to incorporate, first choice really is where are you going to do it? So do you incorporate federally? Do you incorporate in Nunavut perhaps, or Ontario? Nunavut, the end of the territorial law. By the way, there's no residency requirement in Nunavut if you're incorporating for a director. So regardless of which way you go, they both will give you a valid corporation that can sign contracts, own assets, and obviously hire people. So this slide right here is really the fork in the road. The next slide, which we're going to go to, walks us through the questions you should ask yourself before choosing the path. Slide. So regardless of where you incorporate, you're actually going to carry on business in another. If you're going to carry on business in another province or territory, you're still going to have to register there under an extra provincial corporation. So incorporating federally doesn't remove that step. You're going to do business up in Nunavut, you're still going to have to register up here in Nunavut. So the decision is really strategic for yourself. So if you know that you're likely going to want to expand, let's say outside of Nunavut where you're doing business, then federal incorporation might make sense, especially if the Canada-wide name protection, which isn't as good as having a trademark, but still provides you some protection, and if that matters to you. So if your business is going to be Nunavut focused, or a Nunavut corporation is, I should say not really, or a Nunavut corporation is often actually simpler and perhaps a little bit cheaper to maintain. The compliance work is closer to your actual footprint, and you're actually going to be working with local registries and laws. So if you're up here doing business, it makes sense to do so and register it up here. And we'll talk about NTI registration after. So the core questions I would probably ask a client here when they're trying to decide is, where will the business realistically operate in the next few years? Perhaps it's local and it's going to expand. And do I actually need a national name protection of any sort? Then you might look to federal. And how much administrative work and cost are you really prepared to take that on? So the next slide is going to deal with incorporating in Nunavut.
Sorry, can I add one thing there?
Sure.
Federal corporation, so if you're registered under the Canada Business Corporations Act, you have to publicly disclose under the individuals with significant control. It's essentially any individual who owns 25% or more directly or indirectly of the corporation. So if some people don't want to disclose who the owners are of a corporation, you should not register under Canadian federal law.
Peeking through the veil. Who's behind the companies? And they'll look back layers, not just the first layer to see it's another numbered company.
And Nunavut does not have that.
That's right.
Registry.
All right, so if you choose Nunavut, you're going to be incorporating under the Nunavut Business Corporations Act. The main legal requirements are pretty straightforward. You need at least one director. Doesn't have to be a resident here. Here, because under the Calwit. And that director must be an individual, obviously who's an adult, can't be bankrupt, and you have to be of sound mind. So you need to have some competency, obviously. You must also have a registered office in Nunavut. That is the address for the corporate records and really to get the service of documents. So if you're going to be sued, somebody can find an address here in Nunavut to file a claim against you, perhaps it's tax related. We as a law firm are sometimes used for corporations to set up in Ontario or federally. But when it comes to actually incorporating up in Nunavut, we work with an agent, and I actually give them a plug there, Field Law. And we work with Field Law, who then has an office up here, and we use their address for companies that are done or set up in Nunavut, but perhaps the director and officers are elsewhere. So we can work that through our agent up here. So indeed, most, not quite yet, but in most companies are actually likely going to look to register in what's known as a Nunavut Legal Registries filing as well. So you're going to miss address, see if you need to have a license, certain registrations, and of course your CRA number, your business number. So as Connor had mentioned earlier, the incorporation actually just creates a legal shell. It's a different individual. And that corporation gets licenses, registrations, has to comply with certain obligations and allow that other entity, the shell, to actually operate as a business in Nunavut. So opportunities for Indigenous businesses in Nunavut. So with that foundation in place, we talked about how you incorporate, what's behind a corporation. We can talk about what the opportunities are. So Indigenous businesses in Nunavut participate basically in three different overlapping systems. One's the NTI, Inuit Firm Registry, under the Nunavut Agreement. The other one's the NNI policy, and that's for territorial procurement. And then there's the Federal Indigenous Procurement Framework, known as PSIB. Each has its own rules and actually its own logic. NTI, for example, is really treaty-based. It focuses on Inuit ownership, control, and benefits. NNI is territorial, and it's based on Nunavut residency, you need to be up here to be bidding on contracts. And the PSIB program is federal. And this applies to Indigenous, Inuit, ownership and work share thresholds from right across Canada. A lot of the work is simply knowing which system you're going to be in at any given moment and then structuring things so you meet the system's test without actually undermining the other. So it's good to know what you're trying to do before you step in, because you might trip up on one by just meeting a threshold in another. So the NTI registration criteria is the next slide. So let's start with NTI. NTI's mandate flows from the Nunavut Agreement. It's not a federal program, and it's not a territorial policy either. It has its own lane. So to qualify as an Inuit firm, a business must meet the legal requirements to carry on in the Nunavut settlement area. And one of them is it has to be a limited company of some sort. At least 51% of its voting shares beneficially owned. It doesn't say this in the actual trust agreement, but it's interpreted as such and controlled by an Inuit individual. So I'd say owned and controlled. A cooperative, it could be a cooperative as well, as controlled by an Inuit, as I mentioned, or an Inuk sole proprietorship or partnership. So what NTI is really looking for when they review these documents is real Inuit control, not just names on a cap table. In practice, really, this means that the Inuit member, as part of this position, should be the key decision-making roles. So they're setting strategy, they're approving major hires, directing how the business show up and how the clients and communicates going outside the firm. They're not, what they're trying to avoid, which is known in the South, is renting a feather, right? So they don't want that. They actually want to see the actual involvement in the business. The underlying goal is really to make sure there's economic activity in the settlement area to create real sustained benefit for the Inuit. On the next slide. So legal requirements to carry on a business in Nunavut. This slide really just brings us back to the basics that underpin everything that we've talked about so far. Whether you're aiming for NTI status, NNI status, PCIB eligibility, you need to be legally entitled to operate in Nunavut. And this usually, again, requires registration with Nunavut legal registries, a business license, depending on the community and the type of business, of course, WSCC registration, because of workplace safety and compensation, that's takes place in the real world. And of course, a CRA business number, so you can deal with tax and payroll properly. That's not a complete checklist though, by any means. And it will require by where your location is, your sector, and whether you or not have any employees. But if those basic foundations we just talked about are missing or out of date, then every other status you rely on is really on a shaky ground. So these are the fundamental things you're going to have to take that on. So the next slide is about steps to register. How do you register? Well, NTI's registration process is pretty structured, but it's not complicated. You have to apply to NTI. So you have to sign a document on paper, actual wet ink it, by the way, and it has to be mailed in. It's not email, it's not done online. It does take weeks to do. So you identify the business, you describe its ownership and the governance. They're going to want to see your shareholders agreement if there is one. Provide the documents and proof of the Inuit ownership and what the level is. Like I said, we're looking at 51%, which gets a little bit more difficult, perhaps on partnership. We're going to point out the units. And usually this is done by just showing the share registries. You mentioned the shareholder agreements, the similar corporate records that Connor talked earlier about. So these documents would go to NTI as part of your application. And then you can also explain how the business is actually controlled in practice, so that NTI can see that there's actual Inuit decision-making that matches Inuit ownership. If NTI is satisfied, the business is then added to the Inuit firm registry. The practical tip I give to clients in this area is to treat NTI status as something you maintain. It's not a one-off for just a filing purpose. That means keeping the governance records, as Connor mentioned before, clean and up to date. And if you're dealing with any material changes, change of ownership, directors, officers, anything that really goes to day-to-day operations, that's reflected in the Inuit leadership. So the next slide is dealing with bid criteria and weighting. So once you are on the Inuit firm registry, the status can be that status can factor in how bids are evaluated within the Nunavut settlement area. So you're gonna apply for an RFP. And see if you can win a contract. Every criteria is obviously going to vary in a procurement situation, but there's like some common elements. One, Inuit ownership and governance, Inuit employment and training, it's always big, subcontracting to Inuit firms, and the broader community benefits, such as local investment, skills development. But the key theme from those points is really credibility. Decision makers are looking for clear, traceable Inuit participation in the work and a clear benefit that flows back to the Inuit, not just an Inuit firm label, or in South they refer to as rent a feather. So when you build teams or structures to work for the settlement, just be sure to always show that there's Inuit leadership in a way that stands up on paper and in practice. So here we go to the registration criteria. And really, we're going to start to shift a little bit to the NNI policy, which is a different system again. NNI is a government of the Nunavut procurement policy. It's not treaty-based, it's not a federal program. It focuses really on Nunavut residency. To register as a Nunavut business under NNI, a business must meet legal requirements to carry on business in Nunavut, talked about, and it has to be done on a biannual basis, show that it fits basically one of three categories. So you have a for-profit limited company, 100% is owned by Nunavut residents or the Nunavut business, you start behind it. It could be a cooperative controlled by a Nunavut resident or a Nunavut business, sole proprietorship, which we talked about as well. Again, the proprietor, the owner is a Nunavut resident, or partnership, where all the partners are Nunavut residents or Nunavut business. So where NTI is about Inuit identity and control, to the 51% threshold, NNI is really about where the owners are based, that being up here. Again, because I'm sitting in a well, no, I would say that. Steps to register for NNI. The NNI registration steps mirror kind of similar logic that I just mentioned. But you submit an application and you want to be recognized as an Nunavut business. You can provide, again, the corporate records, which we've talked about, evidence of residency for owners and where relevant for the Nunavut business in the chain, if it's owned by another business. And once the government of Nunavut, GN, is satisfied, the business is then placed on the NNI registry and becomes eligible for NNI bid adjustments and procurement. And those can be done, those adjustments can materially change the evaluated price and can easily be the deciding factor in a closed competition. So when you're bidding on something and you're NNI registered, it's certainly to your benefit. There's certain advantages, obviously, about being based here and looking for work here and winning contracts. So if you can meet the Nunavut benefit test, it's usually worth the effort and certainly secure. So if you can secure and maintain your NNI registration, it's certainly well worth doing. Again, residency is key though. Where you don't have to be resident up here if you want the NTI side, which also enables some procurement opportunities. The next one, federal Indigenous procurement side. So now we're moving into the federal world. So here we're talking about, it's known, sorry, I was using PSIB because I'm just speaking in acronyms being from Ottawa, but it's known as the Procurement Strategy for Indigenous Business. And then once that's the program and the policy, I guess, and then you're registered under the Indigenous Business Directory. So these are run by the Government of Canada, and it's the third track here. So for a PSIB set aside, basically the published rules, I'll tell you why in a second, require two things. First, at least 51 has to be Indigenous ownership and control. When I talk about control, both has to be direct and indirect. And secondly, at 30, you need to have 33% of the total value of the work, the contract value of the work, must be performed by the Indigenous business. So that means a third of the work has to be done by the Indigenous business, even though it may own 51% of the work. So, yeah.
It has to be performed by Indigenous businesses.
That's right.
Not by the Indigenous partner.
That's right. The Indigenous business itself. And that can be subcontracted out, but to an Indigenous business. So you can't win it and then say, now you're going to sell that to a separate corporation, for lack of a better term. the 33% still has to be done by Indigenous, and again, we use the word Indigenous here, I'm including Métis and Inuit in my statement. So in fact,
The second caption there, it says at least 5% of their total contracting value. Is that geographically located anywhere? Like, I mean, could the Department of Defense download it all into New Brunswick if they wanted to, as opposed to here?
like maybe internally they might want to, this is a government policy,
Yeah.
right? Spread it across Canada. I don't know. Like these are statements, I don't even think they've ever reached 5%. These are public statements that they put out
Okay.
there. Who knows? I highly doubt that they hit the 5% threshold.
But there is no, it's not. In the best of all possible worlds, if they followed it, it doesn't necessarily mean it has to go to one.
Geographical.
Yeah.
Yeah. So in practice, as I'm a PSID program now, I'm aware of recent IBD audits because there was some government issues with this program. To see if the Indigenous partners actually receive majority of the financial benefit or performance of the work. And when I talk about majority of benefit, majority of work language, it actually doesn't appear anywhere in the guidelines or the formal PSID policy. But I've seen it in audit correspondence by the IBD where they're saying they want the Indigenous entity and the people doing the majority of the work, which is not what the policy says. So to follow the policy, you still might have to face realities of someone looking at an audit. They're trying to make sure that the Indigenous business is really doing the work, and they might use that elevated standard. And it's tough to challenge because who's going to judicially review that? There's costs. So I've had clients in this space where they just capitulate, they give up, either step away, or if they're on the settler side, because it just doesn't make sense for the other side. You not have the capacity to do it. So I think we're in a phase right now where the pendulum rate is swinging because of the news items lately, and something was also said in Parliament about the Rent a Feather program. So we'll see how that plays out.
You just triggered another question for me. Do you ever see situations where, let's say, Inuit and Innu or Inuit Métis and that are in some sort of dispute as to whether they should be getting the contract from the government?
I've not seen disputes between organizations like that. I mean, because you're bidding on something, it's going to be based on points. So it's
Okay.
not RFP that goes out, I'm not a procurement litigator, so I put deals together. So I don't tend to challenge them. We have other people in our law firm, Graham Reagan, for example, in our office, we deal with procurement challenges. And those that do challenge are those that lose. Right?
Okay.
If you win, you're happy to go forward with whatever the result is. So, okay. So PSID is obviously critical if you're making those set aside bids.
So just to go back to your last question around like geographic location. Just did a little Googling on that quick.
Okay.
It doesn't say anything about geographic,
Yeah.
but it's department by department basis.
Hmm.
So it's each department and the federal government has to do 5% of the procurement. So going back to your example, it couldn't just be like D&D hires one firm in New Brunswick to, do a huge shipbuilding project. That's 5% of the budget. Fisheries, every single department has to do 5% of the procurement.
No, but
It doesn't say geographically.
just as a resident up here, I find, and this is not in any law anywhere. Bureaucracies tend to make life easier for themselves, okay?
Mhm.
So if you wanna hire someone in Joe Haven versus hire someone in outside of Montreal, there might be a tendency to do it. I'm just wondering
Mhm.
if there's any requirement to move it around.
Yeah.
Okay.
No, so no requirement, no, just that it is, maybe some departments might have like more hesitancy to hire like a northern Nunavut based business, maybe not, but yeah.
DFO might not be Department of Fisheries and Oceans, but still called that item. May not be doing a lot of work in Alberta.
Yeah,
So. All right, since December 20th, 2019, federal departments operating in the Nunavut settlement area have been subject to a specific Treasury Board directive on government contracts and leases in the NSA. So this directive is really meant to give back to Article 24 of the Nunavut Agreement, pushes federal procurement in the NSA, which is the Nunavut settlement area. So find that earlier. So there's a few things that are at play here. So we're trying to prioritize Inuit firms on the NTI registry. trying to use the Inuit benefits criteria and Nunavut benefits criteria and bid evaluations as well. So this is the federal government doing that. And document how procurement support Inuit participation in economic development. So for bidders, the practical implication is that you often have three lenses on the same project. So you have the federal PSIB test, you have the Nunavut agreement obligations to apply in the settlement area, and depending on the structure and the way the work interacts with territorial places, like NNI, you have that in your mind as well. The common thread is that proper compliance is no longer enough. Paper compliance is no longer enough. They are going to look beyond it. And I've seen NTI, for example, want to look at the service agreements, set up a corporation, the corporation then has an exclusivity to hire a company that's not Indigenous, not Inuit. So they're going to look at the control structures there. You don't want to be winning a contract and then contracting all the profits to another entity. Again, trying to avoid the rent and feather situations that's known down in the south. So federal buyers in Nunavut really are expecting structures that are going to respect the treaty, meet the PSID rules in form and substance, and that's control, indirect and direct, and deliver real value to the Inuit and the Nunavut communities throughout the life of the contract. I think that's where I'm going to pause now and hand it over to my colleague here, Brianna, to talk about valuations.
Sorry,
Yes.
I seem to be monopolizing the questions, but one that strikes me, and it's not legal, it's just living up here. It rings in my head, okay? NTI wants to drill down to see whether or not it's actual benefits as opposed to, you know, I wouldn't use the phrase rent a feather, that's
Something they use in a sense. It doesn't really work up here. I don't know the right.
I don't know if there is one. But what is their human resources like? What I find up here is ironically, a lot of the times the organizations rely on Southern help. I have nothing wrong with that. They get what they need, okay? But are they, because that seems to me very specialized in terms of law, accounting, a whole bunch of things to find out what's actually going on inside these organizations. So do we have the ironic situation that NTI is ensuring that things are being run by Inuit by using people from the south to go into these organizations?
Well, my experience when they're reviewing, let's say, a shareholders agreement and the services agreement that's referred to it in, is they do it in-house.
Really?
So I've not, unless they're hire people in the back that I don't know, but when we register companies up top, when we get the comments back, it's right from an NTI register. Sometimes I think they get far too in the weeds and they shouldn't be commenting on things they are commenting on. But from what I've seen.
No. I'm not saying you're wrong, it just.
And I could be corrected, but from my knowledge.
It's universal up here is that the talent pool is very shallow, right? So that seems to be a very.
They are very slow.
Okay.
Take weeks and weeks and weeks. Nothing happens quickly up there. That's my experience as well.
Okay, so when we think about, starting or running a business in Nunavut, the first step is often deciding where to incorporate federally or provincially or right here in Nunavut. And while that choice, like we talked about, sets the legal foundation for the business, it's just the starting point. So communities also think about the opportunities that a business can create, supporting local jobs, providing reliable services, and ensuring the business can continue for future generations. In Nunavut, there are additional opportunities that are unique to the north. Critical minerals projects are expected to continue growing, and with the recent devolution of land and resource powers, communities have more say in how projects and partnerships are being managed. Valuation helps us understand these opportunities. It gives us a clearer picture of a business's financial health, its growth potential, and its long-term sustainability within the northern context. Understanding your financial position and growth potential and community impact can also help a business position themselves for federal procurement opportunities in Nunavut or any of the ones that Cam had mentioned. And many federal projects look for partners, seek them out, who demonstrate this financial stability, clear governance, and a positive community engagement. factors that affect value. So valuation in Nunavut is different because, as you know, certain factors have a bigger impact here than in the south. High shipping, fuel, and labor costs all affect profitability. Revenue can fluctuate with the seasons, population, or reliance on project-based work. And as you know, asset management, things like replacing or maintaining equipment and buildings is often more expensive, but competition is different too, right? Fewer players can create stability, but it can also make a business vulnerable if, say, a key contractor customer is lost. Many businesses also provide essential community services, which has value, beyond just the financial statements. Other key factors include, of course, the regulatory environment. With devolution, the way businesses interact with territorial regulations can, of course, increase value. And we can't forget about intangible assets. So things like permits, land access, and strong Inuit partnerships are critical, as they can enable growth and open doors for new opportunities, especially in these exciting new resource-based projects. So contrary to popular belief, valuation isn't just about the numbers, right? It's about helping your clients help their communities and business owners make better, more informed decisions. It's useful for things like succession planning, whether for a family business or a community-run enterprise. It helps when evaluating these partnerships or joint ventures, especially for projects that require, a significant investment or a high level of collaboration. Knowing your value also strengthens a business's ability to compete for these federal contracts by showing clear financials and the value of your business, the value that your business provides to the community. You increase your standing with these government partners and position yourself for procurement opportunities and infrastructure services, resource projects, and the like. Valuation can also guide decisions when operations are interrupted, so helping assess losses. And it's important for planning expansions like buying new equipment or facilities, and of course for monitoring performance over time to make sure that businesses continue to deliver benefits for the community. So, overall, valuation provides a foundation for informed decision-making. It strengthens community benefits and supports long-term economic resilience in Nunavut. So that concludes our presentation. We're happy to answer any questions that you might have for us.
We timed this out, so we had 5 minutes for questions. It looks like we're a couple minutes faster than we planned. So we have 7. So if you have any questions, fire away. We also have a chat function, I believe, that we can answer questions on.
One thing just to add as questions come in for the valuation piece, consider is if you are registered on the IBD, the NTI, NNI, if you ever go to sell your business, a lot of your value is derived from being on those registries. So, for example, if you're on the IDB, Indigenous Business Directory, you essentially can you keep that goodwill, that company, and the value, you have to sell it to an Indigenous buyer. So just something to keep in mind in terms of extracting the goodwill from the company. Now, often it's, partnerships or limited partnerships, contractual joint ventures that are set up for a specific project. And so, those will never be sold in the future. They deliver the project and that's it. But if you are an Indigenous business, just bear that in mind when you go to sell, you have to sell to an Indigenous buyer.
So a comfort place might be going to this Canadian Council of Indigenous Business, CCIB, and you can be certified by them. They'll review your records. You can present to somebody that you are a certified business at the time of sale.
So as the marketplace grows, and the next step will be how to extract the value of those businesses that are growing and, transition to the next generation. If it's community owned, it's not a big a concern, but if it's an entrepreneur that owns a business, they have to sell it to another entrepreneur or to a community.
The ones that have legs here are usually family owned.
And then they can just, but they have to ensure that it passes down.
Oh, that's probably changing. That's what I've noticed. A general question I have, nobody else has jumped in, so I might as well keep going. a lot of these businesses are mom and pop operations and small sizes. Is there a big change when, let's say, a mega project comes in, a big line or something like that? Is it basically the same but scaled up, or is there other considerations that take place? Like, I mean, that sort of passes in the stratosphere. We don't really see much of what's going on, but all of a sudden, instead of a garage opening up in Joe Haven, you've got a monstrous mine opening in Baker Lake. And corporate wise, does it make much difference?
It's very project specific. Are you bidding on a contract, or is it what you're doing? It may not matter if you're going to be owned. Just coming up to do business. Sometimes on procurement items I've seen as well, it's just, do you have Indigenous or Inuit participation? It's not weighted. I mean, you might get 10 points on a bid, or it may be 25. I was just looking at a mine recently, it's 25 points. But it may not require that Indigenous participation is in a position of control. You're just showing participation. I've seen that down south as well in Ontario on bids. They're looking for Indigenous, but it just helps you get points to win it, and then that provides, you know, a benefit to a community if they can become involved in that. But how active they are in the business is questionable when it's just, what does that mean? Marketing, right? It's like they're showing up, or is it actually doing something? And we're seeing the pendulum shift or move to where, you know, NTI and PSIB programs, right? The audits are really looking for full-blown active participation and control for those set asides.
I think it's like, it's the larger the project and going to the federal procurement, if it's, you know, large mine remediation or something that the federal government's putting up, and it's for a set aside, the issue becomes that 33% of that contract value has to be done by Indigenous businesses.
Yeah,
So, you know, if it's a $4 billion project, that means $1.5 billion of that has to be done by Indigenous businesses. Well, that would be difficult to get the Indigenous businesses that have, you know, that have the experience doing that work, right? So that's where the issue becomes on the larger projects is really the capacity building.
That's right. And then who's putting up the bonds for that? Who has the money to backstop it? It's not Indigenous businesses that have that kind of money. So there's a risk on the other side. So forces partnerships, it might be.
And how is Indigenous defined? Like, I mean, I know what Indigenous means, but here Indigenous means Inuit.
Yeah.
But could, let's say, Dene from somewhere else come in and be classified as Indigenous?
For federal, yes, they
Okay.
could require the PSID. Yeah, it's open to Métis as well.
Okay.
There's a whole, be another presentation. What is Métis? Right? The Council of Métis, man, it's all like there's different organizations, right? So, we'll listen to Métis. I think that's taken us to the top of the hour. So we should-
Yes, I think we'll have to wrap up, but thanks again. And so the recording of this will be posted, and I guess people can have your contact information if they have any questions. We have a question in the chat about your contact information.
Certainly.
You can just get through
Yeah, we can just respond directly. My name's pretty easy though, cam.cameron@gowlingwlg.com.
check.
And then I can
don't have
share
it.
that with everybody. If it's a question that's tax related and corporation values.
Still.
We'll put it in the chat.
Yeah,
Okay, thanks again. Thank you.
thanks.
Thank you. Thank you.
Everyone.
It was very interesting. Thank you very much.
Okay.